Just to reiterate, Wilder Co. Limited, we are a accountancy firm based in London and Stevenage. We help anyone from small businesses through to large multinationals, and we have been helping multiple clients in all sorts of sectors through the trials and tribulations of the current COVID-19 crisis, what reliefs are available to them, and how we can help navigate them through those reliefs. So I'll quickly click through. There's a welcome slide. There's a picture of us, quite recent. Particularly, I'm sure you're excited to see that, and get through to the meat and potatoes. So we're going to kick off with a look at the coronavirus job retention scheme, or as most people are calling it these days, furloughing. The coronavirus job retention scheme, or CJRS as I'll call it from now on, so I don't have to say that full mouthful, is the mechanism that was introduced by the government, which enables employers to access support so they can continue paying part of their employees' salaries. The aim of this was to avoid unnecessary redundancies in businesses that would otherwise be viable. So to try and keep as many people in the workplace as possible. The intention has been for it to be used by businesses that have been severely impacted on by COVID-19, but the government has said on many occasions that all employers are eligible for help under this scheme, so they can avoid laying off staff. So it's not just those in hospitality or retail, etc. Such staff are called furloughed workers, and this means that they are temporarily asked to stop working due to the lack of available work for them. But the positive side of this is that they're not made redundant. The benefit being that at some point in the future, we'll get onto that later, the government will reimburse the employer with up to 80% of the wage costs, capped at £2,500 per month. This would include things like employers' national insurance and other compulsory payments, but wouldn't include any conditional payments like bonuses or benefits in kind, anything like that. It would be employers' national insurance and basic salary. They said that it would include things like committed commissions. So if the conditionality has already happened, then that could be pulled into it. The employer has the option to uplift the 80% to the full 100%. So it's not limited to the 80%, but the government will cover 80% at max. The affected employees do have to make sure they do absolutely no work. Just clicking on that's got all the details that I've just covered. Yeah, so the employees have to make sure they do absolutely no work. One of the biggest stumbling blocks with the scheme is that the scheme does not remove the employees' employment rights. So essentially, the employee has to agree to go on furlough. Now, in many cases, I'm sure that would be no problem. The staff member has a choice of either being made redundant or going on furlough. They're most likely going to choose going on furlough. However, it could affect their employment rights if they have something specific in their contract about redundancy, and we have to be careful about how that interacts. That's worthwhile consulting HR professionals or solicitors in that case. Also, if it's not a redundancy situation, this has to be carefully managed. There may be a case where you'll need to top up the employee's salary to the 100% to get their agreement to go on furlough. But most of the time, we're finding that hasn't been an issue, and staff have been happy, to go on furlough and take the 80% of their salary, or the 100% if the employer is being generous in that way. The decisions can be taken on an individual basis. It's not a blanket. All employees of a particular type have to go on furlough. It's individual by individual, but the minimum period is the 3 weeks. You can't do it for less than that. Can't do it for a very short period of time. One of the questions we hear on a regular basis is how does this affect training and apprenticeships? There's absolutely no impact on training. You can continue to study, you can continue to take exams, and continue as an apprentice. You just can't do any work that would benefit the employer and would lead to essentially any turnover for the employer. So you can't do anything that's going to create any benefit for the company. So that's the basics of the scheme. Who's eligible? Well, pretty much every UK business and charity is eligible. If you've got employees on a payroll, you are eligible. They have to have, however, have been on payroll on or before 28th of February 2020. So long as they were before that time on the payroll, they can be furloughed. And the system for claiming it will be via the payroll system. So that'll make it very easy to identify the staff who it can be applied to. They have to be on POA online, and the staff member has to have, the company has to have a UK bank account. And the last part seems pretty obvious, but it's one of the criteria. It is a retrospective claim. This is one of the things that has caused some initial confusion when it was originally put forward by the government. There was a famous pub chain that it was reportedly considered that they weren't going to pay staff until they got their grant. It is actually the other way around. You pay the staff as you normally would, and then the money will be claimed from the government in retrospect. Now, the portal to do this will be through payroll, will be through the POA system, and therefore it will be carried out by whoever runs your payroll. If you're outsourcing it, then it should be carried out by your outsourcing providers. If you're running your own payroll, you'll need to do it yourself or ask for help from your accountants. The portal's supposed to be ready, purportedly going to be ready by the 20th of April. That's the time when it's supposed to be accessible by the payroll users. Some commentators have suggested that payments could start to flow through by the end of April. However, it seems hugely optimistic. I can't see a system this complicated with the volumes that will be involved having payments coming to employers by the end of April. I think it's more likely to be towards the mid or end of May, or possibly even June. One would hope that payments start coming through in May, as if this is meant to be a system or scheme to help companies survive during this period. The money needs to come through sooner rather than later. But your guess is as good as mine in terms of how efficient the government's going to be able to run the scheme in once the portal is all set up and running. Okay, that's the furloughing scheme, the job retention scheme. So, do we have any questions on the job retention scheme?
Hi, Chris. Yeah, we do. We've got a few, and I think I'll start with one closest to what you've just touched upon in terms of the timelines of when we're expecting government to pay those furlough costs. I think, as you've said, it's meant to be sort of towards the end of April, but we might need to sort of watch that space. Is that your assumption?
Yeah. The portal's open 20th of April. Now, assuming you can very quickly submit your claim and you get that in 21st of April, with the entire rest of the country who will be doing the same thing, it depends upon how quickly the revenue will process those claims, and how quickly they then will pay out. Now, if you were to look at an example of personal tax returns, if you do your personal tax return on the 31st of January, the very last day, and you've got a reclaim position, I have clients who have been that late because they don't like to give information till the last minute. And I have known they've needed to wait 4 or 5 weeks before they get the cash back from the revenue in those circumstances. So given that's a similar system in terms of it is a self-assessment, the numbers are submitted via an online system, and then it is paid over after processing, one would assume it would take a similar amount of time. However, the volumes are going to be even greater. The only mitigation would be potentially the government is in a position where it is prioritising getting the cash out the door. Yeah, it's an unknown factor. I would not bank on it being immediate. I would not bank on the cash being in by the end of April.
Okay, thanks, Chris. Not hugely encouraging for all of us, but I think you're probably right on that one. Okay, what's up next? Can individuals who have left your organisation be furloughed if their roles are now filled by new employees?
Okay, there's 2 parts to this question. The first part is if you've made someone redundant since the 28th of February, can you bring them back into employment and classify them as furloughed? That part is a yes. That part has been specifically stated by the government that yes, you can reinstate staff who you made redundant due to COVID-19, as long as they were made redundant after 28th of February. You can reinstate them and then treat them as being furloughed. So that's the first half of that question. Now, the second half of that question was if you've employed someone else to fill the role. Now, from my understanding of the redundancy process, you are not allowed to refill a role when you make someone redundant within 6 months. I believe it's 6 months. I would suggest you contact an HR professional or employment law professional on this. Within 6 months, without offering that role to the person who was originally made redundant. First, this makes this question slightly awkward, as it sounds like employment regulations have been breached to start with. Therefore, I think it would be very difficult to find an government FAQ that covers areas where employment regulations aren't being followed.
Okay, no, that's a little clearer, so thank you for that. Another question that's come in has actually been asked by a few people. Can I employ people that have been furloughed by other companies?
Yes, this again is something that in the last week has been clarified by the government. And yes, if someone has been furloughed by another employer, they are allowed to seek alternative employment, provided obviously that has been agreed as part of the furloughing agreement with the original employer. We have to make sure that we stay within the bounds of what people are contractually obligated for. Again, it's something which I would suggest contacting an HR or employment law professional, because despite the fact that you've been put on furlough, if your employment contract states that you can't take alternative employment, I will believe you would need to get your employer's permission first in order to be able to seek other employment. However, from a tax perspective, from the perspective of the furlough itself and the job retention scheme, taking a second form of employment doesn't invalidate the 80% relief that your employer can claim.
Okay, that makes sense. So there's a few HR issues sort of running through as well. We've had a question from Claire, who would like you to clarify the point on commission, please. So she says that their commission scheme is based on individual monthly performance, paid a month in arrears, which is obviously not guaranteed and varies person to person. Is it just base salaries up to 80% that are calculated as part of the scheme?
Okay, so yeah, so this one is slightly complicated, in as much as it is non-conditional payments which are covered. Now, I believe, now I'll have to double check on this one myself, but I believe the discretionary commissions and discretionary bonuses aren't allowed, but if the commissions are not discretionary, then they would be. Now, I think this is worth me checking back and finding out absolutely. But most commission schemes, even when they are based on a calculation, are usually discretionary in the fine print in employment contracts. So it would really depend upon the employment contract itself.
Okay, and another one, we've got lots of questions coming in. I'm just going through all of them to see if any of them cross over from what has already been answered. Mark says, we have a new starter in the company from the beginning of March, and he has to be furloughed. Can staff, another question is, can staff be brought back before the 3 weeks have elapsed?
No, 3 weeks is the minimum. If staff are brought back within the 3 weeks, then they won't be able to claim under furlough.
Okay, that's very clear, thank you. Okay, I think at this point, if there's any questions that we haven't covered, I will make sure that we get answers directly to you from Wilder & Co, so you've got a tailored answer, unless as we go through the rest of the presentation and the points that we're going to be looking at, please do continue to send questions through, and if they apply to those particular issues, we will answer them in the webinar, and if we've missed anything, then we will make sure we come to you directly so that you've got the answers that you need. So I'm now going to hand over to Prashant to do his section, and so again, just going to click a couple of buttons and change the presenter. Great, okay.
Thank you, Sophie. Yeah, I did share my screen. Hopefully everybody can see it and also hear me clearly. So good afternoon, everyone. Welcome to the webinar. I will start with a slightly more specialist topic of enterprise management incentives and how the COVID-19 affects some areas of the EMI share option scheme, which is the enterprise management incentives scheme. We will then look at the self-employment income support scheme, which was introduced as a rescue measure to COVID-19. And finally, we will look at the tax payment deferral options offered by the government in response to the crisis. So let us look at EMI. Enterprise management incentives are special types of share option plans which have approval of HM Revenue and Customs. So because these are endorsed by HMRC, that means that they come with certain tax advantages for employees as well as employers. For example, there is no income tax or national insurance when a share option is granted to an employee. There is also no income tax or national insurance when that employee exercises that share option. The employee is likely to qualify for entrepreneurs relief and benefit from a 10% capital gains tax rate. And the employing company will also likely benefit from a corporation tax deduction, which means that when the employees exercise their options, the employer will be able to take a corporation tax deduction and reduce its tax bill. So prior to granting an EMI share option to employees, a company will normally seek to agree the value of the company with HMRC. When HMRC agree this value, they normally give it a window of 90 days for that agreement to stay, for that valuation to stay. And it's within that window when employers want to grant those share options. Now, because of COVID-19, a lot of employers who are in this position may not manage to grant these options to their employees within the 90 days. And we have heard that HMRC may extend this window to 120 days, but there has not yet been any official announcement. Chris has already spoken about furlough and the coronavirus job retention scheme. And I want to touch upon some implications on an EMI share option when it comes to a furloughed worker. As furloughed workers are not allowed to work for their employer, they would technically be breaching the working time requirement, which is a requirement for EMI share options. So this could disqualify their the EMI status of their share option. One of the requirements for an EMI share option is that the employee must work at least 25 hours per week on average for the company, or at least 75% of their working time if they're not in full-time employment. So far there is no HMRC guidance clarifying these kind of issues. Another area which will require clarification is whether a furloughed worker will still be classed as an employee under the relevant tax legislation, and whether that furloughed employee would be able to participate in new option grants from the employer. Of course, it would be expected that furloughed employees with EMI share options should not suffer as a result of COVID-19. However, guidance from HMRC is yet to be published. So watch this space. Employers who have already enterprise management incentive schemes in place should consider these points, as COVID-19 is likely to have brought about quite a decrease in the value of many private company shares. So if for example, an employer has already secured an EMI valuation, which is what I spoke about slightly earlier, but that employer has not yet granted any EMI options to their employees, then that company may want to secure a new valuation with HMRC before making the option grant, so as to secure a lower value of the company shares which attach to the options. This would be beneficial to the employee, as it would mean that the exercise price of the new share options is lower than initially expected. Now, EMI share options which are already in place, i.e. granted by the employer to the employee, these options might be underwater. This means that the current market value of the company's shares is lower than the exercise price that the employee would need to pay when exercising their option. So such share options would currently be coming across as worthless to those employees. Employers may invite employees to surrender their existing EMI options, and the employer could consider awarding a brand new fresh option to those employees under different terms or new terms based on the effects that COVID-19 have brought about. Some employers might also be struggling to pay things like bonuses to their employees, which they had promised to their employees because of past performance. They might be struggling because they might be out of cash at this point in time. These companies may wish to consider EMI share options as an alternative to making such bonus payments. It is an incentive which can be provided to employees, as the employees will get a potential equity stake in the company, but at the moment there is no cash cost to the employer to incur in remunerating or incentivizing these employees. Okay, so let us now move on to the Self-Employment Income Support Scheme, the SEISS. This is a specific rescue measure introduced by the Chancellor for self-employed individuals and individual members of partnerships who are suffering a reduced income due to the pandemic. Like the coronavirus job retention scheme for employees, this SEISS scheme will also receive a grant from the government, which is worth 80% of 3 months' trading profits. The grant will also be capped at £2,500 per month. Therefore, if the average monthly profit of the self-employed individual is £3,125 or more, then the maximum grant available to that individual will be £2,500. The scheme is only available to individuals who satisfy the following requirements. The first requirement is that the individual's self-employment or partnership trading profits are not more than 50,000. This figure of 50,000 can be calculated in one of two ways. The first is based on trading profits solely for the 2018-19 tax year. These profits should not be more than £50,000. The second way of calculating this is averaging the trading profits over the last 3 tax years, i.e. the 3 tax years being 2016-17, 17-18, and 2018-19. The average of these should not be more than £50,000 per annum. The second requirement is that the individual's trading profits should be more than half of their personal total income. So as an example, if a self-employed individual also receives rental income from a portfolio of investment properties, and that rental income is more than the trading profits from their self-employment, then that individual would not be able to qualify for a claim under the SEISS. The third requirement is that the individual's self-assessment tax return for 2018-19 needs to be filed with HM Revenue and Customs by 23rd of April 2020. Now, most self-employed individuals or partners of partnerships will have already filed their 2018-19 tax returns because the deadline was the 31st of January 2020. But for those who haven't, they should get their return in by the 23rd of April so that they can qualify for the scheme. The fourth requirement is that the individual should have traded in the 2019-20 tax year, which we have just completed, and they also intend to continue trading in the current tax year we are in, which is the 2020-21 tax year. The fifth requirement is that the individual has lost trading profits because of the COVID-19 pandemic. Now, it is not clear how HMRC would check whether a loss of trading profits has occurred due to the coronavirus, but HMRC has stated that individuals will need to confirm to HMRC that their trade has been adversely affected by the coronavirus. So HMRC will be making initial assessments to identify individuals who will qualify under the SEISS. They will then contact such individuals by the middle of next month, which is May, and will invite them to make a claim. This claim will need to be made via an online service, which is not yet ready, but HMRC will publish details of this service as soon as it is ready. The grants are to cover 3 months worth of trading profits, and all 3 months trading profits will need to be claimed in a single application, and HMRC will pay out a single lump sum grant payment once they have approved the claim. HMRC has stated that they will be making these grant payments, or they intend to start making these grant payments by early June. That is what they're expecting. Okay, let us now look at the deferral options which the government has provided. These deferral options have been introduced to provide individual taxpayers and businesses with an immediate cash flow benefit. The deferrals offered are for income tax and VAT payments. Deferring income tax payments. Individuals who are required to make payments on account for their 2019-20 income tax liabilities will be able to defer their second payment on account. The second payment on account is normally due on the 31st of July each year. The second payment on account for 2019-20, which becomes due on 31st July 2020, has now been deferred to 31st of January 2021, and taxpayers may choose to settle this second payment on account at any time before the 31st of January 2021. No late payment interest will apply to this deferred second payment on account as long as it is settled by 31st of January 2021. The eligibility for this deferral is automatic, and it applies to all taxpayers who need to make the second payment on account. Deferring VAT payments. All UK VAT registered businesses may defer any VAT payments becoming due between 20th March 2020 and 30th June 2020. These VAT payments may be delayed, but will need to be paid in full by 31st March 2021. If a business wishes to take advantage of this deferral, then it is important that they make sure their direct debit for VAT payments is cancelled. So if the direct debit arrangement which is in place at the moment is not cancelled, then HMRC will collect VAT payments as normal. So businesses might find that they have paid the VAT when they in fact wanted to take advantage of the deferral. So you should act on that quickly. The eligibility of this deferral is also automatic, and there is no need for businesses to apply. HMRC has confirmed that the deferred VAT payments will not attract any interest or penalties. and the deferral facility is not available for VAT payments, for certain VAT payments, being VAT payments under the VAT MOS scheme or import VAT payments. The MOS scheme is a mini one-stop shop scheme, which is a way of paying VAT on supplies of certain digital services by businesses to end consumers. And that's the end of my discussion topics. Sophie?
Thank you, Prashant. That's
yeah.
You've covered a lot of ground there, so thank you.
Okay, thank you.
We have had some questions come in for you. So I will start off with, what is the definition of self-employed, i.e. if you are self-employed but use a limited company, what do you classify as, and can you claim under the self-employment income support scheme?
Okay, we have seen this question arise a few times, and it is perhaps useful to just understand the line between what is self-employed and what is employed. Now, for example, if you charge your clients through a company and then extract your remuneration from the company via a salary or a dividend or both, then you will be employed because you're a director of the company, and because you're employed by the company, you would not be able to use the SEISS, but you may be able to use the coronavirus job retention scheme that Chris spoke of earlier. If you charge your clients directly in your own name or via a partnership, then you are self-employed. If this is the case, then you will be able to use the SEISS, and you can make a claim for the grant as long as the requirements are met.
Great, okay, that's helpful. The next question that came in is, can you confirm that the VAT deferral is based on when the VAT is due to be paid and not when it is incurred? So for example, if it's due to be paid between March 20 and June 30th, not on transactions between March 20 and June 30, if that makes sense.
Yes, again, it is always not clear what these measures mean. A VAT payment arises as continues to arise. Sorry, a VAT liability continues to arise as time goes, but the due date or the payment date of that liability is at a certain time in the future. So what we need to bear in mind is that the deferral is for payments and not for the liability. So for example, if a VAT liability for the quarter ending 31st of May 2020 becomes due on 7th of July 2020, then it is not possible to defer that VAT payment because that payment becomes due on 7th of July 2020 as opposed to the deferral period which is between 20th of March and the 30th of June 2020. So any payments that are arising between 20th of March 2020 and 30th of June 2020 can be deferred. So if a business has to make a VAT payment at the end of this month, that is at the end of April 2020, then they will be able to defer that VAT payment right up to 31st of March 2021.
Okay, thank you. I hope that's helped a few people that were listening out for that one. Next one, which I think will be people will be keen to understand a bit further. It's just been mentioned that SEISS is not available to self-employed company directors. and that they should look to furlough instead. Can I ask the best course of action for self-employed directors of a limited company who are not on a PAYE scheme by the 28th of February 2020?
Yes, sure. So the SEISS is only available to a self-employed individual or a member of a partnership. A director is not normally self-employed, as they are an officer of the company and are regarded as employees, as I covered in the question earlier. If the individual in question is self-employed and providing services in his capacity as a separate individual, that is not as a director, then there may be scope of making a claim under the SEISS. Of course, that individual needs to have been reporting his or her self-employment income within his or her self-assessment tax returns. The government acknowledges that there is currently a gap in their plans for directors of limited companies who do not draw a salary or draw a minimum salary, and such directors may not receive any support. We will obviously be looking out for any updates on this area, but at the moment there is no further information.
Okay, thank you, Prashant. And that's particularly interesting to me as I run my own company and fall into that section too. So that's really helpful. Thank you. We've got a couple more. How will HMRC calculate the trading profits for SEISS in order to determine whether they are over or under the £50,000?
Yeah, that's a good practical question. And HMRC, as they have been continuously updating their guidance, have provided some clarity on this area. How will one know that they have trading income under £50,000 so as to qualify for the scheme? So HMRC will start by using the turnover figures provided on tax returns by these individuals. And from this turnover figure, they will deduct expenses relating to office costs, travel costs, things like clothing costs, for example, for uniforms, staff costs like salaries, costs of stock or raw materials, any financial costs such as insurance or bank charges, or any costs of business premises such as heating, lighting, or business rates, any advertising or marketing costs, training courses for staff or for the individual, or any flat rate expenses. And it will be the net of the net amount derived after deducting these expenses from the turnover figures, which will be used as the trading profit. Now, HMRC had clarified that it will not deduct any brought forward losses from previous years to arrive at the figure of trading profits. And it will not also deduct the individual's personal allowance to arrive at the individual's trading profits, which is quite understandable.
Okay, fantastic, thank you. And we just have one more that's come in from Sarah. Sarah asks, can limited businesses just cancel direct debits for VAT without officially informing HMRC?
Yeah, I would think yes, because the direct debit arrangement is your approval to your bank that you would make, that you agree to make this payment to a certain party by direct debit. So if you, as the person making the payment, does not want to carry on with that agreement, you should be able to cancel it. It is best to check with your bank first, but to my mind, it should be quite simple to do.
Okay, thank you, and hope that's answered the question for you, Sarah. Thank you very much, Prashant, for that section. We are going to hand back to Chris for the final section on business interruption loans. So I will just click another button, and Chris, this should
Absolutely.
go over to you now.
Thank you.
Hi again. We're going to now cover quickly, as I see that time is pressing on. I'm going to quickly cover over the loan schemes that are available, touch on grants, and also touch on the latest announcements with regard to the charity sector. So firstly, and probably most importantly for those listening, we'll talk about the SME arrangements. We'll briefly touch on the large company arrangements after that. So the coronavirus business interruption loan scheme, or CBILS, is to provide support to SME businesses. Now, this was defined as being companies with a turnover below £41 million, so quite large businesses fall into that category. But it was originally badly taken by the banks. They weren't particularly engaged with this concept. They didn't like the idea of propping up businesses who were suffering during the coronavirus pandemic. And the banks were routinely either declining applications or requesting personal guarantees from directors, owner-managers of businesses, and those would be secured over their personal assets. Now, that was in the initial days after the loan scheme was announced. Since that time, the government has had some very stern words with the banks involved, and they are no longer allowed to have it as a stipulation that the loan application is after having exhausted all other routes to market, and also they are no longer able to ask for personal guarantees from the owner managers of businesses. So to date, apparently around, these are government statistics, around the 3rd of April, around 90 million pounds of loans had been approved for around 1,000 businesses. One would hope that that had increased significantly since then. It's advisable for any companies who have been declined before the last couple of weeks to consider reapplying with their bank, and if they've been asked for personal guarantees and have been put off by the concept of personal guarantees, they should consider reapplying, because those personal guarantees are no longer part of the package. The government is guaranteeing the scheme, and therefore that should be the guarantee that the banks require. So the banks can't also specifically ask for a mortgage over any principal private residences. So that was one of the things that the banks were doing as well, which was trying to get the business owners to put their own properties up as collateral against the loans. The government will also cover the first 6 months of interest on these loans. And they are, I've gone to the large one, back a slide, first 6 months of interest on these loans, and the loan is guaranteed by the government. Now, one thing to understand about the loan being guaranteed by the government, that doesn't mean that the government will pay the loan. I've had a few people come to me saying that if the government's guaranteeing the loan, does that mean I don't have to pay it back? Unfortunately, it doesn't change the liability. It only protects the bank in the outcome of the business going into liquidation. The government will cover some of the shortfall on the loan with the bank, so it's a protection to the bank, so it should incentivize them to lend. There are currently over 40 accredited lenders in the market, so one of the common misconceptions is that you have to go to your own bank. You don't have to go to your own bank. You can go to any of these 40 accredited lenders, which includes high street banks, it includes challenger banks, and it also includes some alternative finance providers. They will all have their own criteria. They will have slightly different loan forms, etc. However, most will, in fact, all will certainly require some sort of projection to show that the business is going to be viable once the coronavirus pandemic theoretically goes away. So you'll need to provide financials going forwards to show that the company will be viable in the future. Beyond that, each bank's and provider's requirements will be specific to them. But after the government gave the providers a kick, the loans should be more accessible. Anything from £1,000 to £5 million. So they can range quite significantly in terms of amount and scope. So that's the SME scheme. The large business scheme is for companies with turnovers of over 45 million, and these loans can be up to 25 million. These loans will attract commercial interest rates and are only 80% guaranteed by the government. Similarly to the SME scheme, the government has been trying to push the banks to release these loans, but we shall see. Okay, going on from the loan schemes, we move towards government grants. Now, the vast majority of the grants available to general businesses relate to rates relief. This means that the companies have to have been paying rates of some sort, either under small business rate relief or paying full rates in order to be able to claim the amounts back. There are specific extensions to these grants for businesses engaged in retail, hospitality and leisure sectors, and they are being carried out by local authorities. Now, I am aware that some local authorities have already paid over these grants. They should be doing it automatically based upon the statuses of the businesses that are applicable. However, if you think that you do qualify and you haven't received a grant or received any notification from your local authority, it's well worth contacting them to make sure that you are going to receive a grant, or that you are, or to let them know that you are due one if they don't believe that you are. So that's the grant schemes. Now, charities. Charities quite often don't fall under the grant scheme, but they would have fallen under the furloughing scheme. They're perfectly capable of claiming under the job retention scheme. But there was also an announcement on the 8th of April that charities across the UK will receive a £750 million package of support to continue doing the vital work during the coronavirus outbreak. Specifically mentioned were hospices and those supporting domestic abuse victims, but that's not, of course, the limit of the charities that are going to be targeted with this support. This is split between the direct cash grants, which are going to be mainly targeted towards those key services, but also 370 million is going to be towards SME charities, a chunk of which is supposedly going to be provided via the National Lottery Community Fund. Now, there will also be a big charity drive based on a TV appeal, the Big Night In, which is happening in a few days' time. So the amount there is unknown, but there's at least going to be 20 million coming in from there as well. Now, the amounts to do with the Lottery Community Fund, the access to them, it's currently unknown how the SME charities can access that fund, but the application system is supposedly going to be available in the coming weeks. So it's a bit of a watch this space situation for charities at the moment in terms of these grants. because the announcement date was only on the 8th of April, and the application system is currently unknown. So although it sounds like a good there's an amount of grant available out there, how the charities are going to get access to it remains unknown. Any questions on that section?
Yeah, thanks, Chris. We've got a few. Are there any grants for businesses that don't pay rates? For example, we pay rent to a landlord as office tenants.
Yeah, currently the grants that are available are targeted at companies which have essentially had to vacate their premises due to the social distancing measures. So it's very targeted in that direction to do with rates. If the landlord is paying the rates bill on behalf of a tenant company, then I would assume it would fall under some sort of negotiation with the landlord. I know that's not particularly helpful as a comment, but the system for grants is targeted towards rates rather than anything else. The other reliefs that are available obviously are the job retention scheme and applying for loans. Obviously the big difference in loans and grants is that grants aren't repayable and loans are. So one would hope that in this period of time that you might be able to reach some sort of agreement with your landlord if they are somehow benefiting from this rate relief whilst you are not occupying their premises.
Brill, thank you very much. We've had a question from Sarah. She says she's contacted her council about the £25,000 grant, but hasn't heard back. What should the next steps be? I guess it will be just to continue to get in touch with them and push the point. But do you have anything to add to that, Chris?
Unfortunately, I think it's just going to be a case of continuing trying to contact them. Different councils are going to be, different local authorities are going to be different in terms of their efficiency levels. They're obviously suffering in the same way that we are in terms of having to work from home or having to try and socially distance whilst working on site. So their efficiency levels are probably suffering. And if you haven't fallen into the automatic system, it may be a slow and painstaking effort to get yourself the grant you think you are entitled to. Persistence, I would suggest, is key.
Chris, may I add that it is also worth checking the local authorities website, because quite a few local authorities do have an application process, especially for the small business rates relief grant online. So if Sarah hasn't checked the website, then she should have a look at the website as well.
Great, thank you both. I think it's a bit of a postcode lottery in terms of where your business is located and how that particular council is able to react or how they're set up. I know a friend of mine knew exactly what she was entitled to and ticked all the right boxes, but still received a negative response, but actually went back and continued to press the point, and they realised that they had made a mistake. So you're right, guys. I think it is a case of just being sort of politely persistent and understanding how everyone's trying to deal with the influx of inquiries and that kind of thing. We've got one question here from Pete, who says he has a dormant limited company which is set up in readiness to launch in the next few months as a startup, but obviously everything that's going on now has pushed the launch of his business back. Is there any support available for his type of business or people in that similar situation?
But okay, so this is going to be an interesting question, because it will be partially dependent upon the terminology that's being used, but a dormant limited company by definition has had no trading activity whatsoever, and no transactions, and therefore it would be very hard to see what support would be available for a company that has literally done nothing. I would assume that it is in a situation whereby some costs have been incurred personally by the director, and he's getting into a situation where he was about to start it up, move any intellectual property into the business, and start employing staff. Unfortunately, it's unlikely that this company will have any sort of rates relief, because being dormant, it won't have any property to be rateable, won't have any staff to claim, and therefore it's unlikely that there are any reliefs available. The loan scheme might be one route. However, again, being able to show projections that show that the company will be a success after the fact, after we get out of coronavirus, when there is zero track record, may also be difficult. Yeah, I think that's probably the best bet, is the loan scheme. But again, you're going to need to be very persuasive with the banks when you've got zero track record. You'd have to have a look at what you've been doing up to this point to get you to the position that you're in, where you were about to start.
Yeah, so that's a good point, Anna.
Oh, sorry, Sophia. I was just about to add, if that person was separately self-employed or was working in an employment, or had another company, then they could look at those schemes from that perspective rather than from the dormant company perspective.
Yeah, that's a good idea. And but thank you, Pete, for asking that question, because I think there are a lot of people in a similar situation that have put huge amounts of effort into creating a business and creating IP and ready to go at a certain point, and have obviously found that they can't at this time, and we're obviously not too sure when we're going to be able to launch those types of projects. So appreciate that question. I think there are a few questions that I've probably missed, or we don't have time to answer. So what we will do is make sure that the guys at Wilderco are able to get in touch with you directly and address anything really specific to your business. So if we have missed you, please bear with us and we will get you an answer. But we've just got one question to finish on, which relates to something in the future. Is there a specific accounting line for expenses as a result of COVID-19?
Okay, so this is actually quite an in-depth topic, so I won't bore you you guys too much with the particulars of accounting regulations, but this will be an interesting point to discuss in detail once we get to the point where companies are producing statutory accounts, end-of-year accounts, which cover the period of COVID-19. As you'll have multiple different areas that impact the financial statements. There's grants, there's loans, there's the furloughing of staff, and the monies that are gained from the government for the furloughing of staff. And all of these will need to be considered separately and treated appropriately. For example, grants are income. And as they are not paid back, they are subject to corporation tax. So unless the government states otherwise, the grants that are available to trading businesses will be taxable under corporation tax. There's no VAT on grants, but they would be treated as a form of other income. Loans obviously aren't a form of income because they have to be repaid, and so would hit the balance sheet. So they're very separate. But then you've got the question of what can you net off in your accounts? Can you net off in your accounts the payroll costs of the employees, and then the amounts that have been gained back from the government under the furlough scheme? I would suggest that you can't net the two off because they are not fundamentally the same thing. This is the advice that we've had from other technical experts as well. However, there would be a case to put costs that are directly attributable to COVID-19 under a separate line of exceptional items on the face of the profit and loss account, so that it is separated out, so that it doesn't muddy the waters and show a poor position when otherwise the company would have been profitable. So there's a lot to consider. I've touched on it very briefly. There's nuances to everything I have just said. So I would suggest that this is one which would be good, a good lecture for the future when companies are considering the accounts that they're going to be filing, which cover this period. So one for the future for sure.
Excellent. Thanks, Chris, for covering that, and we'll check back in, as you say, in the future. But I think that really brings us to an end for this webinar. So that just leaves me to thank Chris and Prashant for their presentation and for answering those questions. And as I say, anything else that we've not covered, we will get in touch with you directly to answer those questions for you and support you through this period. You can go to the Wilder&Co website as well, which is www.wilderco.co.uk, and they have a dedicated COVID-19 business information hub. So do check that out. Westminster Business Council will shortly be launching some virtual networking, some virtual business mentoring, and also some online support for apprentices, university students and other young professionals. Our next webinar is next Wednesday at 3 p.m. and we'll be covering the topic of selling in a crisis with the award-winning Bob Etherington, who will be discussing how to approach potential clients in this difficult situation. So please do look out for the next invitation to that. Please keep in touch with WBC and let us know if there's anything that we can do to support you or your business. Thank you again for everyone for joining in, and to Chris and Prashant for their good work. Thanks everyone, take care.